Hello everyone, welcome back to Road to Ownership. We're going to deepen our understanding of real estate today. Our title for this discussion is Unveiling the Dangers of Defaulting on Your Mortgage. Before we jump into this, could you take a second and subscribe to this channel? Your support is greatly appreciated. Let's begin by understanding what mortgage defaulting means. It's when a homeowner fails to make their agreed upon mortgage payments. This can happen for a variety of reasons. Unexpected job loss, medical emergencies, or even financial mismanagement. It's a situation that many homeowners dread, and rightly so. Why? Because defaulting on your mortgage can lead to severe consequences, both immediately and in the long term. It can result in losing your home, a tumble in your credit score, and a lasting impact on your financial health. Knowing the implications of defaulting on your mortgage can help you avoid financial pitfalls. Let's delve into the dangers of mortgage defaulting. Now that we understand what mortgage defaulting means, it's time to discuss the risks associated with it. Mortgage defaulting is not just a financial problem. It's a Pandora's box of troubles. When you default on your mortgage, you're not just missing a payment. You're potentially setting yourself up for a cascade of financial difficulties. The financial implications are severe, and they start with penalties. Penalties for mortgage defaulting can be steep, often amounting to several thousands of dollars. But the financial repercussions don't stop there. Defaulting on your mortgage can also lead to increased interest rates. This means that the cost of borrowing money in the future could be significantly higher for you. From car loans to credit cards, you may find that the rates offered to you are far from ideal. Then there's the big one, foreclosure. If you continue to default on your mortgage, your lender has the right to take possession of your home. In the first quarter of 2024 alone, over 75,000 properties in the United States were in some stage of foreclosure. That's a staggering number, and it underscores just how real the risk of foreclosure is. The emotional toll of defaulting on a mortgage can be just as devastating as the financial consequences. The stress of potentially losing your home can severely impact your mental health and relationships. It's a burden that no homeowner wants to bear. But it's not just about the individual homeowner. The ripple effects of mortgage defaulting can also impact communities and the broader economy. When foreclosure rates rise, property values in the surrounding area can fall. This can lead to a decrease in community revenue, affecting everything from schools to public services. Defaulting on your mortgage can lead to a host of problems, from financial stress to potential foreclosure. It's a situation best avoided. So as we move forward, let's explore how we can prevent such a dire scenario. After all, knowledge is power, and with the right information, we can make informed decisions about our financial future. Another significant concern when defaulting on your mortgage is the negative impact it can have on your credit score. A credit score is a numerical representation of your creditworthiness. Or in simpler terms, it's like a report card of your financial behavior. When you default on your mortgage, this is reported to the credit bureaus, and it can cause a significant drop in your credit score. Just how significant? Well, according to certain studies, a foreclosure can lower your credit score by anywhere between 100 to 150 points. This is a severe blow, especially when you consider that credit scores range from 300 to 850. A lower credit score can greatly affect your financial life. It makes it more difficult to secure credit or loans in the future. And even if you do manage to secure a loan, you might find yourself facing higher interest rates. And this isn't limited to just mortgages. It can affect car loans, personal loans, and even credit card rates. Additionally, a low credit score can also have non-financial repercussions. For instance, landlords often check credit scores when considering potential tenants. A low credit score might make it harder for you to rent a place. Some employers also check credit scores during the hiring process, especially for positions that involve financial responsibilities. A poor credit score could potentially cost you a job opportunity. To put it in perspective, a default on your mortgage essentially sends out a distress signal to potential lenders, landlords, and employers, indicating that you might be a risk. It can take several years, often 7 to 10, for a foreclosure to be removed from your credit report. So it's not just losing your home. The ripple effects of a mortgage default can permeate through various aspects of your life, making it more difficult and more expensive to secure credit and potentially affecting your housing and employment opportunities. A poor credit score can make it more challenging to obtain loans or credit in the future. It's another compelling reason to avoid defaulting on your mortgage. Now that we've covered the dangers of defaulting on your mortgage, let's talk about strategies to prevent it. Firstly, budgeting is key. It's essential to have a clear understanding of your income and expenses. This way, you can plan and set aside the necessary funds for your mortgage payments. A well-structured budget can give you a better grip on your financial situation and help you avoid falling behind on payments. Secondly, consider refinancing. If your current mortgage terms are proving to be too heavy a burden, refinancing might be a viable option. This process involves replacing your existing mortgage with a new one, often with more favorable terms. Thirdly, explore loan modification programs. These are arrangements where your lender alters the terms of your loan to make the payments more manageable for you. This could involve extending the loan term, lowering the interest rate, or even reducing the principal balance. Lastly, don't underestimate the power of professional advice. Financial advisors can provide valuable insights into managing your finances and keeping up with your mortgage payments. They can help you navigate through tough financial times and suggest strategies tailored to your specific situation. Remember, seeking help when you need it is not a sign of weakness, but a step towards financial stability. By being proactive and seeking help when necessary, it's possible to avoid the dangers of defaulting on your mortgage. The dangers of defaulting on your mortgage are clear, but with the right knowledge and strategies, you can avoid this financial pitfall. Remember, the road to home ownership is not always easy, but it's worth the journey. Whether it's understanding the impact on your credit score or exploring strategies to prevent defaulting, every piece of information helps you make more informed decisions. One last thing, if there's a topic you'd like us to cover, please add it in the comment section. Also, take a moment to share and like this video. Thank you.